The 4-year cycle is no more. I think we are going to make another all-time high in 2026. Retail is very accustomed to buying tops, and it's been a risk-off environment thus far. Once we hit risk on, and they're probably going to come in closer to the top.
I'm joined by my good friend Aaron Arnold, co-host of Altcoin Daily, one of the biggest crypto channels in the world, and one of my go-to sources for crypto information. Check out their channel, link down below. They've got a lot of great resources. We're going to go over some of Aaron and his brother Austin's work. Austin, unfortunately, couldn't be here today. But we're going to talk about some of their more recent videos. We're going to get his outlook on Bitcoin and altcoins alike, and how Fed policies may or may not be impacting crypto markets. Welcome to the show. Welcome back, Aaron. Happy New Year.
David Lin, it is great to be here. You are one of the best
Thank you.
in the space when it comes to interviewing people in crypto, macro, markets in general. I'm bullish on you, David. So I have some info to share with your audience on crypto, and we'll start a discussion in the comments.
You and I have a running joke that every time I invite either you or your brother or both on, it's the top for crypto. I'm not, is it the top right now? Let's start there.
It's, common to do collabs, one, when the market's topping, and two, in the start of a new year. So, maybe we're hitting both. Is it the top? Is the 4-year cycle playing out? It was basically a couple months ago at the top. It was the local top. I think the 4-year cycle is no more. I think we are going to make another all-time high in 2026.
Okay, I'll get to your outlook in just a bit, and I'll get more details on why the 4-year cycle is no more. Take a listen to what Jerome Powell had to say. I'll just play a few seconds of this clip of Jerome Powell, Fed chair, responding to a Department of Justice criminal investigation into him. Take a listen.
Good evening. On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned, in part, a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public.
Okay, I'm going to stop right there. He's basically saying point blank, Trump and his allies are threatening criminal investigation and charges on to myself because I refuse to comply with Trump's orders to lower the interest rate. We don't know if that's exactly what's happening, but that is the assertion from the Federal Reserve chair. So a few questions for you. First, what is your initial reaction to this to this video that I just played for you? And second, overall, does Fed monetary policy play a role in crypto markets?
Fed monetary policy plays a huge role in crypto markets. And two, that specific statement from Jerome Powell, unprecedented. It has been shaking up crypto Twitter. It's been shaking up markets in general with just how unprecedented it is. The Fed is independent. That's one of the reasons why the US dollar is the reserve currency of the world. And we can argue how independent is it really, but it is certainly the veil of independence has been broken this time around with, Jerome Powell pushing back on Trump, kind of saying, I'm not going to be pushed around. You're bringing indictments against us and, we don't deserve them. And so Fed monetary policy plays a big role on if Bitcoin does make a new all-time high this year. And, stuff like that, it's just uncertainty. It's fear, uncertainty, doubt. It makes, first of all, generally speaking, to break the veil. And if the Fed isn't as independent as the world thinks, that's not good. But two, just with the feud that's going on for the next few months between Jerome Powell and Trump before Trump puts another guy in there, it makes you think maybe they're not going to ease. Maybe they'll tighten a little bit just because they want to show that they are independent. And if they start tightening again, that wouldn't be ideal. And it kind of brings me to, although I'm bullish in 2026, I do think that right now, January, we do have a few big issues that we do have to get past. And then after these things in our past, then I'm bullish into 2026. And hopefully we kind of like rise into the worry of these things. And these three things are, one, the Fed shakeup. Sometime, Trump is going to put a new guy in. It could happen this month. It could happen the next couple months. It's seeming more and more likely that it's going to happen sooner rather than later. Maybe Jerome Powell resigns. Either way, eventually he's going to be out. And so we just have to get past that. And Trump will put in his own guy, which will continue easing. Number two, another thing in the short term, which I'm kind of worried about, is the looming government shutdown again. We just reopened the government after a record amount of time. However, the government could shut down again at the end of this month. And if it does, that would not be good. And then the third kind of thing we have to get past is the Supreme Court is going to make a decision sometime in the next couple months, maybe this month, whether the tariffs are legal. And I actually think if they shoot down the tariffs, that's bullish, but still it's all this kind of like uncertainty and shake up, which is going to shake up crypto. So the Fed, number one, government shutdown, number two, tariffs, number three. We need to get past these things, hopefully in January, but if not in the next couple months. And once those are in our past, I believe that there are tailwinds ahead of us.
The fact that Trump explicitly has said that his new Fed chair, we don't know exactly who that may be yet, but we do have maybe some ideas. He wants the new Fed chair to immediately lower rates. Economists are concerned that this may be a trigger for more inflation. How does Bitcoin and the rest of the altcoin market typically perform during inflationary markets or environments?
Obviously hard assets do well under inflationary periods, but even more than that, just like an easing period, if what you say is true, and Trump has said this, and it's like, this is what the market is expecting, Trump puts in his own guy that eases, that's a risk on environment. That's good for crypto assets. More money will be flowing through the system. It's ultimately a bullish thing.
The global financial system is rapidly moving on chain, and today's sponsor, Cool Wallet, is a name worth watching. Cool Wallet builds next-generation cold wallets designed for a world where real-world assets, payments, and savings live on the blockchain. Their flagship credit card-sized hardware wallets combine CCEAL6+ secure element protection, mobile-first usability, and a unique 2+1 factor authentication system that requires your phone, your biometric ID, and your card to approve every single transaction. So here's a Cool Wallet Go card. It's an easy-to-use, on-the-go, card-sized hard drive that stores your private keys and literally fits inside your wallet or purse. Activating the card is simple. It takes about 30 seconds. All you have to do is download the Cool Wallet app and follow the on-screen prompts. Let me show you now. Activating a new wallet is very simple. Simply go on the app, click on Add Wallet, and it's going to ask me if I have a card. Yes, I have a card. Every time you order a Cool Wallet Go product and package, it comes with two cards, primary and backup. It's going to ask me which card type, in this case, Cool Wallet Go. Notice how it pairs with NFC. Click on that, create a new wallet, activate primary card. Either of these cards can be your primary card. Simply scan the card by tapping it to the back of your phone. Success. And it's important to know that you need the primary and backup cards to be able to fully activate the entire wallet. So both of them have to be active. Now create a new pairing password. This is important for when you need to recover your wallet in case your cards are ever lost. Generate by card. It's going to ask me to generate a private key. Tap my primary card, start setup. Now it's pairing my private key to the primary card. Now that both cards are paired with the private keys and activated, the wallet is ready to go. As you can see, it's a brand new wallet, so it has no funds in there. Every time you put money in there and you want to transfer funds to another wallet, like this, for example, it will require you to scan and tap the card to the back of your phone as a security precaution. That's just one of the benefits of using Cool Wallet. It's very secure. Remember how I said to remember your pairing password? Well, if ever you lose the card, go to settings, go down, replace primary card, and it's going to ask you to enter your pairing password. That will start the process. So once you've activated the wallet, you can use the app to swap to other tokens and cryptos. All you have to do is first click on the manage icon on the app, add the crypto that you want, then go to the home page and click on swap, and the crypto you just added should be there. You can also send cryptos to another wallet, making peer-to-peer transactions instantaneous and frictionless. There's also an earn function that allows you to stake your holdings to generate yield. Cool Wallet also recently launched a breakthrough fiat on-ramp feature. So instead of going to a centralized exchange first, you can on-ramp directly to Cool Wallet. Users can create a bank account under their name and a fiat currency of their choosing that's available, wire the funds in, and have those dollars automatically converted into a stablecoin that's on-chain, directly into your wallet within minutes. With support for 40 plus mainnets, staking, lending, NFTs, and advanced clear signing protections against phishing and malicious contracts, Cool Wallet is positioning self-custody for mass adoption. To learn more, go to the link down below or scan the QR code here. And if you do use my code, you'll get a 5% off on your first purchase. I'd also encourage you to check out my interview with Cool Wallet CEO Michael O for more details on the product and why we need self-custody today. And he also explains in great detail how the security functions work. Link also down below. Okay, well, let's take a look at the broader, I think, world landscape right now. There's a lot of media attention sucked away from financial markets on geopolitical events. We don't, personally, I'm following whether or not Trump's going to take any action on Greenland and how the rest of NATO is going to respond. I think that's a bigger threat to the world than whether or not Bitcoin is going to move towards 100K. So just a sentiment gauge from you, because you have your finger on the pulse in the entire market. How do you think the retail audience is reacting to geopolitical news versus crypto events right now? What is the investment focus on right now in January? Could be crypto still, could be Bitcoin dominance, could be something else.
In crypto or just generally?
Generally.
Well, certainly retail isn't interested in crypto right now. We're just about to hit 2 million followers on Twitter. So, we are still growing, but it is very hard to grow. And, ultimately, in retrospect, we can always recognize when things were too frothy, when things were high. We began the interview, we always collab at all-time highs. In retrospect, it's obvious to say things like when Trump launched his own meme coin, that was the top. I would say at times like this, I think it's obvious to me after being in the market for so long, many cycles, that we're near the bottom. We've already bottomed, technically bottomed, or possibly have one short leg lower to go. But, regarding the Greenland and all AI is like what people are bullish on, just retail in general, bullish on AI. And, tons of stuff going on in the world, which has nothing to do with crypto. I would say that how I look at it, because we do kind of like cover crypto and how it relates to the rest of the world, I think crypto today is in its 1996 moment. And I'm relating it to the internet boom of the 90s. A lot of people say, hey, is it 1997, 1998, 2000? I think it's 1996. And the reason I say that is because that was the first time the US government enacted significant, explicit regulation on the internet in what's known as the Telecommunications Act of 1996. The internet industry had gotten so big, the government said, well, we should regulate it, we should bring it onshore, and that's what happened. And we know what happened next. And that's what crypto is going through right now. The Genius Act that just happened, with Wall Street getting involved with the ETFs, and with the Clarity Act, or crypto market structure, that's coming. And so there's a big question of what happens to crypto in the next 6 months. I don't see, I'm bullish into end of year, and I'm particularly bullish, kind of thinking more long term, because the US is opening up.
So if retail investors aren't the primary drivers anymore, why are you still bullish? What's going to be the key driver of Bitcoin above 100K?
Well, Bitcoin, the low of last cycle was like 17K, 15K, 20K. But still, Bitcoin spent a lot of time 40K, 50K, 60K. I didn't want to buy Bitcoin at 50, 60K. I thought it was too high, just psychologically. Obviously, I wish I could buy Bitcoin there now. But the point is, Bitcoin went from 40K, 50K, 60K to 125K without retail. That was driven by Wall Street, institutions, public treasury companies. Ethereum went from about 1,000, 1,300 to 3,000 without retail. The fact is, retail is very accustomed to buying tops. And, maybe another reason why we haven't seen like this full-blown top yet. But I think, it's been a risk-off environment thus far. There's a lot of catalysts coming up in 2026. Risk-on environment, hopefully, is one of the biggest ones. The Clarity Act market structure bill, another huge tailwind. The ETFs, going into its second and third year, Now, wirehouses are allowed to do solicited sales. So before, Bitcoin ETFs were the best ETFs in Wall Street history in 2024. That was before solicited sales. And what I mean by that is analysts or agents calling you saying, hey, you should invest in Bitcoin. They couldn't do that before. Now they can. It's just a process. What else? Oh, the midterms, dude. The midterms, I think Trump is going. I just had Anthony Scaramucci on. I think you interviewed him recently, and he kind of gave his thesis, which he thinks Trump is going to pump up the economy for the midterms, so people vote for his team. Not to mention the big beautiful bill goes into more full effect in 2026. That's stimulus, that's economic growth. I think there's a lot of tailwinds in 2026, and unfortunately, retail is definitely going to come back at some point once we hit risk on, and they're probably going to come in closer to the top.
They're going to come in at some point. That point being once Bitcoin retraces 100K and above, maybe?
I think at this point, Bitcoin is going to have to be over 125K for retail to come in.
Okay. So basically, it's going to be the new top.
The new top, yeah.
Okay. This is an interesting story I want to share with you, Aaron. This is from I believe Reuters. Yeah, global hedge funds exposure to crypto markets has just increased again. 55% of hedge funds hold some crypto-related assets, up from 47% the year before. Funds allocating on average 7% of their holdings to crypto. A survey of 122 investors and fund managers by the Alternative Investment Management Association. If I were to tell you 5 years ago, Aaron, that by 2026, more than half of hedge funds globally, at least the ones surveyed by the AIMA, would have allocated 7% on average of their holdings to crypto, what would your reaction be 5 years ago?
I mean, 5 years ago, to be honest, I was a believer. It wouldn't have surprised me too much. But now that we're here, I think it makes sense as well now that we're here because, retail's not here. It's these hedge funds, these institutions, smart money, big money, whatever you want to call it. I mean, 7% is significant. I don't know if I would have thought 7%, but, it doesn't surprise me because, there's a regulation, which was this huge issue for years and years. What if the U.S. what if Bitcoin fails? No longer a worry. What if China bans it? No longer a worry. What if the U.S. doesn't regulate it? Well, that's changed. And, kind of people who study this kind of see the way the winds are blowing, the way directionally things are headed. And so, they're not interested in chasing a 3-month pump necessarily. I mean, hedge funds do trade, but they can wait a lot longer and pick their spots when they buy low. And some of them probably have more long-term strategies and they're, kind of like holding for longer periods of time. So it doesn't surprise me. Unfortunately, hedge funds, smart money, they buy the bottom and retail chases the top.
So now that we have this fundamental shift or pivot in crypto as an asset class overall, meaning once upon a time, it was just Bitcoin. And then once upon a time after that, it was Bitcoin and cryptos and a bunch of degens on the internet chasing the top. And now we have institutional players and hedge funds being the major dominant drivers of Bitcoin and cryptos alike globally, not just in the US. How will that change the price volatility aspect of Bitcoin and altcoins? And B, what are some of the trends that will have more longevity in the crypto space, that will be more attractive to these institutional players for the long term? In other words, what is the future of crypto investment now that we have institutional investors as the dominant people behind crypto?
Mm-hmm. What are the future trends and how is it those new players affecting price today? Well, to your first question, how are those new players affecting the market today? We've been seeing it. I mean, people talk about the way they're going to dampen volatility. And then we see a 36% correction. People go, oh, it wasn't supposed to crash 36%. But for Bitcoin, that's par for the course. And actually, if 36% or up to 40%, which would put Bitcoin under about 75K, that would be 40% dip. If that happens, that is a more dampened volatility. And I think we've been seeing it where, institutions can pick their spots to buy at the lows. They're in no rush. And they also have to rebalance if there's major price run-ups. And so it kind of dampens the upside as well. Now, as far as new narratives, that's what I really think crypto needs going into 2026, kind of a new narrative. Bitcoin ETFs, the most successful Wall Street ETFs. The most successful ETFs Wall Street ever had, that was 2024. A lot of people don't know this, David, but in 2025, the most successful ETF of that year was the Solana ETF, the spot Solana ETF. And, who knows what the narrative, the next big narrative will be. I think it could be, I know within crypto, privacy is a big narrative. Ethereum is becoming more private. Cardano is doing with Midnight, becoming more private, Chainlink more private. I think maybe the next big catalyst could be Ethereum and Wall Street adopting Ethereum, and kind of something we have been seeing going on for a while, but really hasn't caught on to the bigger picture yet. Wall Street loves the talking points Tom Lee says all the time, 0% downtime, DeFi on top. So if we see like Ethereum start to be the crypto people talk about on the institutional and like CNBC level, that could be a big narrative going forward.
I'm going to get Aaron's favorite project, where we don't have to name specific projects, but favorite trends within the crypto space towards the end of the interview. So stay tuned for that. We're comment down below what you think is going to do best in the crypto space in 2026. Aaron, let's talk about some of your recent work. It's happening. Biggest moment for crypto happening now, something you published on your channel just a day ago, I believe. Yeah, the 10th, 2 days ago. So I like talking to you and your brother because you guys basically show investors what to watch for. How do you source ideas for your videos is my first question, because those topics that you present on a daily basis are actual topics and events and milestones in the crypto space that crypto investors should be watching for. So they are market relevant. So in other words, how should we, and how do you and your brother pick market relevant information to watch?
And by the way, thank you for watching, and hopefully one day you subscribe and like the video. But as far as no. This is my burner account. I get it. Just give me a hard time.
I'm actually subscribed on my main channel. Good catch there.
I get it. No, I feel you. But as far as how we pick, this is something that we're one of the top crypto channels in the world.
Sure.
Number one in the US as far as like engagement and consistent thing. And like, I think what's always kind of separated us, especially in the beginning, now it's a little different. People used to make content in crypto. This is what I think people need to hear about. Bitcoin maximalists. You only need to hear about Bitcoin, in my view, or Ethereum maximalists or whatever. Our point of view has always been, I want to meet the audience where they're at. What do they want to hear about in crypto? That's what I'll talk about. That's what we'll try and get more information on. And also, what are the biggest stories of the day? I'm not like, I'll cover anything that's pertinent to the cryptocurrency space. I'm trying to source stuff that is relevant to the crypto investor.
Okay. So tell us about this particular video that you've made and why you think regulatory changes or updates are relevant to the crypto investor.
Okay. Besides Fed policy, and if we get into an easing cycle this year, besides that video in front of us is the most important thing, the most pivotal thing happening in crypto right now, and that is the Market Structure Bill Clarity Act. In the news, the biggest moment for crypto happening now in the news was that this was supposed to happen at the end of last year, but we had a government shutdown, all sorts of problems. But the crypto market structure bill is finally heading to markup, what they call it. Basically, the bill has been written, but now it heads and everybody has to like redline it and make notes and punch it up. Essentially, it's just something that needs to happen for eventually the crypto market structure bill Clarity Act to be signed into law. And so that's finally happening this week. It kind of seems like there is a big push now that the year started again between David Sachs, the crypto czar, the Trump administration, and the Congress to get this through before the midterms. Because after the midterms, it would be very common if the Democrats took back control during the midterms. It's something we see with any administration, just the opposite party gets back in favor in the midterms. And we just don't know if the Clarity Act will be passed in a bipartisan way after the fact. It's an unknown if that happens. So this needs to happen. And the fact that the markup is happening this Thursday and this is happening. It's a big deal. And just like we see huge stablecoin adoption, David, after the Genius Act got passed, the market structure bill, it's even bigger for Ethereum and Solana and these crypto assets.
Going back to the midterms, you brought that up earlier. Do you think that's a actual headwind or tail risk for the crypto markets? Perhaps the Democrats win. A lot of these bills would have been stalled or would be stalled, right? And we wouldn't get actually more clarity, pun intended, on this particular bill, for example, the Clarity Act or others.
It could be. I mean, that is a risk. I think going into the midterms, it is a tailwind, but after midterms and maybe when they happen, it could be a major headwind. It could be negative. And, crypto is bipartisan now. Obviously, Republicans in the US are much more for it than Democrats, but still many Democrats are coming around. But you just don't know after the midterms if you're going to get those same, Coinbase and a lot of different organizations spent a lot of money last election to educate people running and get them to be common sense pro crypto. And that's kind of where we are today. We have just enough to pass bipartisan crypto legislation. So it's you make a good point. It is a big risk. We just don't know. I think, and I'm not the first person to say this, if the Clarity Act market structure bill does not get passed by the midterms, then there's a risk it doesn't get passed for a while, and that's ultimately not good.
I'll throw some curveballs at you, Aaron, just to get your reaction to this particular story here. Trump's credit card rate cap plan. This is what he's proposed. He declared late Friday, so last Friday, that American credit card companies would be subject to a 10% cap on their interest rate they can charge customers. The move sent shares of large banks, including Citigroup, down between 1% to 4% in early trading Monday. I wonder if this is going to impact consumer spending, consumer lending, and ultimately cryptos. If, let's say, the average, well, we've already discussed how retail is the most important crowd right now, but I'm just speculating now out loud, Aaron. If the average retail investor has less money to spend through credit, they're probably going to invest or speculate less in the crypto market as well. I'm just trying to tie some pieces together in my head, but I'll let you comment on this.
Yeah, it's, it doesn't necessarily have a direct relationship to crypto, but it is a big thing that's happening and does involve, the retail people in the US. And it is like, right now credit cards can issue 20, 30% interest, which is just, not good for an average person to have to deal with 20, 30%. Trump doing this, it's a kind of a populist thing. Bernie Sanders and AOC have tried to do stuff like this for a while. The devil's in the details, of course. If they make it so there's less interest they can take on credit cards that they issue, they'll probably just be issuing less credit cards because they're going to have to take on a lot more risk. Ultimately, to create like a crazy, like blow off top risk on scenario, we usually see people taking out loans, credit, and buying at the highs and everything. Ultimately creates unhealthy markets in the end, which will dip farther. I mean, I don't know. I think it's like that's not on my top 3 of things that I think are going to influence crypto. I think it's ultimately good for retail if they don't have to take on 30% rates. But yeah.
Let's take a look at the Standard Chartered report. In a report by Standard Chartered, the analyst said, I think 2026 will be the year for Ethereum, much like 2021 was. In the report, the bank said weaker than expected Bitcoin performance has dampened prospects for digital assets against the dollar. Given the foremost cryptocurrencies' continued dominance of the sector relative to Bitcoin, however, ETH's drivers have strengthened. Generally speaking, would you agree with that statement?
Yeah, generally speaking, I would agree with that statement. One, that I think if my base case, the bull case plays out, we're going to be entering finally a risk on environment. Raoul Pal talks about the business cycle. I think with the easing that we're going to be seeing, I think that is likely. And if that's the case, I think we will be seeing an environment like 2021. However, I would even go farther, and maybe this is, I don't know if this is where Standard Chartered was going, maybe more where somebody like Tom Lee would go. I think that it's maybe even going to be Ethereum's best cycle yet for Ethereum, the asset specifically with the Wall Street adoption and, just the way the long-term Ethereum chart looks. To me, it looks very bullish. And, we don't have, every other cycle, there's been a lot of noise, especially from those who controlled the narrative the longest. The old Bitcoin maxis, Michael Saylor's like a new Bitcoin maxi, but the old Bitcoin maxis would shoot down, all the talking points that Ethereum had any kind of value whatsoever. And now with Wall Street adopting it, BlackRock, Tom Lee being a big proponent, all of those kind of like anti-ETH talking points kind of crumbling. not that Ethereum's a sure thing, is just, Ethereum's a major player. And the fact that it is programmable makes it very appealing to Wall Street and, different entities like that. Not to mention the stablecoin bill. Most stablecoins are on Ethereum than Solana. Not to mention the Clarity Act, which, if it happens, that's going to be huge. Way, way bigger for Ethereum and Solana than something like Bitcoin.
So the report cites that the outlook is $7,500 ETH by the end of 2026, followed by 15,000 in 2027, 22,000 in 2028, and 40,000 for year-end 2030, which is in just 4 years. For reference, for the viewers, ETH is currently trading at, I believe, just under 4,000 USD.
3,000.
3,000. So, that's more than a 10x from here in 4 years. What is the long-term bull case for ETH?
Big question, because, people have
so many competitors now.
So many competitors, but also, people always have these astronomical predictions for Bitcoin, because we've seen Bitcoin do it 4 years after 4 years, make these runs, and people are always too bullish. But like with Ethereum, it could, 5x, 6x, 7x, which would be huge in a cycle and would be unprecedented. And that's possible. This is what I think. This is how I think. I am bullish on Ethereum. I think if Bitcoin hits at least 150 this year, I think we could see Ethereum. I think Standard Charter's first prediction of around 7.5K could come into fruition and could be accurate. I think if Bitcoin hits at least 150 this year, Ethereum has such a good narrative. And if the Clarity Act gets passed and we're easing cycle, I think Ethereum pushes the 10K. I don't necessarily think Ethereum hits 10K this year. People will say 10K is next. I don't think that's likely. And then long term, if the bulls are right, if the bulls are even a fraction right, I think Ethereum over 20K is possible.
Okay. And if I were to force you to put a finger in the air and give us an outlook for Bitcoin, you said 125K would be the point at which retail comes in. Are we likely going to breach 125K in 2026, do you think? I think
retail is going to come in after we make a new all-time high. So it has to at least get over 125K.
Yeah.
I think my base case and bull case scenario, and even my bear case scenario is 130K this year, which would still technically be a new all-time high. My base case is around 150K for Bitcoin. And my bull case, if we have an easing cycle, if the market structure bill passes, if there isn't a COVID 2.0 or any black swan, I think Bitcoin pushes towards 180K this year.
That's great for Bitcoin. That's basically 2x from here, given that we're at 91 or in change. But your let's just go back to your base case. 130 isn't, Bitcoin has historically in bull cycles done 10x's, right? So the fact that if we're going from 90 to 130K, what's the deal? Is basically my question. Are people moving to precious metals? Is that sector stealing Bitcoin's thunder? Are people just fascinated with AI stocks? Are there just better investment opportunities on a risk-return ratio right now than Bitcoin?
In that scenario, if Bitcoin only touches 130K, I would think what would be happening in the world would be we're still not in that easing cycle and we're still maybe even a tightening cycle, in which case, like we've been seeing, precious metals could continue to rally. I don't like gold just made a new all-time high the other day, right?
4,600 today.
Talk about a run. We need a risk-on easing scenario to really be better for risk-on assets like crypto. And in my bearish scenario, we wouldn't be at that risk-on level. My base case and my bull case, the Fed does what is expected in easing cycle.
Finally, I want to get your take on stable coins. So the fact that former President Nicolas Maduro of Venezuela was captured, has now put Tether back into the spotlight. Says here from the Wall Street Journal, Maduro helped make Tether the world's dominant stable coin. And with the former Venezuelan leader now sitting in a Brooklyn jail, the cryptocurrency's central role in his nation's economy is back in the spotlight. Tether emerges as a vital tool for the state-run oil company to sidestep sanctions, serving as a currency for settling oil transactions. There is a broader question to be asked, Aaron, which is what the U.S. plans to do with the rest of Latin America if Mexico and the rest of South America, I'm not saying they will be, but becomes a more dominant sphere of influence under the United States, it stands to reason that dollarization will happen around South America and Latin America. Will then Tether and stablecoins still be as relevant as they are today?
You know, what's going to happen with Venezuela and how the U.S. deals with it, that may be for bigger minds than me. But talking about Tether specifically, this is how I see it. One, Tether is going to come onshore into the U.S. I think that's guaranteed at this point with the Genius Act passing. I mean, we saw the White House crypto advisor, representative, whoever it was, he moved on to the Tether team, blanking on his name, but you know who I'm talking about. And with the positive crypto regulation passing, I think Tether moves on to shore in the USA. At the same time, you know, you talk about Venezuela being able to skirt sanctions with Tether and all this stuff. Crypto, Bitcoin, crypto, stablecoin, it's money for enemies. I mean, it's proof of concept that bad guys can use crypto, good guys can use crypto. And, you know, just because pirates were interested in gold didn't make gold less valuable. Yeah,
absolutely. And what is the use case for Tether to come on shore?
The use case, I mean, just the reason it would happen is because America is the biggest capital market in the world. The big reason why nobody was touching crypto for such a long time is because not only were governments against it, but it was not clear regulation. So the biggest reason why they're going to come on shore is the Genius Act, and that America is the biggest capital market in the world. And especially if they are courting these huge crypto companies to come on shore. So I think it just makes sense.
Is there still a use case for the average American to be using stable coins if they're not using it for cross-border payments or remittances, for example?
I mean, that's a good point. A lot of Americans don't need stable coins because credit cards, bank accounts, Zelle works just fine. But just because somebody out there in America doesn't need it doesn't mean it's not being adopted everywhere in the world. But I would so it's obvious. We know that like third world countries, they want US dollars. They don't have access. They want stable coins. This is like stable coins are such a good idea for America because stable coins buy US treasuries.
Yeah, that's right.
And it's different. Now it's like third world countries, regular people basically supporting the US treasury industry and also getting access to the US dollar. It's a win-win. However, speaking about just Americans, I mean, I use stablecoins all the time when I'm dealing with crypto companies, which I do all the time. And it is a better mousetrap, in my opinion. I mean, I take wires too and Zells too, but like the reason it's good is because just like all crypto, you know, as a small business, if I do business with PayPal, they censor my money, they hold my money so that my money can be clawed back. I think everybody should accept stablecoins because that cannot be clawed back, and that's why I like it.
Final question. I promised the audience I would get you to reveal your favorite trends for the year. You've already commented that you're bullish on both ETH and Bitcoin, but what do you like? Which sector within crypto do you like the most right now? Is it Bitcoin or is it something else?
I mean, certainly any coin with like a narrative that I know is going to be doing well in a year or 2 years in the future. That's Bitcoin, that's Ethereum, that's Solana. Speaking of like general crypto trends that I think are, you know, forward looking, like we can think back and know like, DPIN was a trend, AI coins were a trend, stuff like that. I think one of the big ones going forward is privacy, especially as crypto gets onboarded into Wall Street. I mean, we're seeing Ethereum, Vitalik saying we're going to make Ethereum more private. Cardano and Charles Hoskinson with Midnight saying we're going to make Cardano and all chains more private. So that's a big trend. Also, Kathy Woods came out the other day, David, and said something she thinks is going to happen this year. She thinks Trump is going to kind of like try and show that he's going to take care of the crypto industry for the midterms because crypto people voted for him and he wants crypto people to vote for his team again. She thinks Trump is going to come out and say that, you know, we are buying Bitcoin to get to 1 million Bitcoin. And whether that's sticky or extensive, who knows? But just the fact that he would come out and say, we want 1 million Bitcoin again, that could be a big narrative going forward. And yeah, I mean, it's a big question, you know.
Do you think meme coins are still a relevant narrative? The fact that meme coins at one point were a narrative speaks volumes to retail sentiment, but what about now?
It's not going to be the same as it was before with the pumped out fund cycle. That being said, I think new ones, different ones, maybe select few of the old ones will rise again because it's just human psychology. Let me tell you what's going to happen, David. When Bitcoin makes another all-time high, and this is not crazy to say, this is just like best practice thinking, you know this, that Bitcoin's it's just human psychology. This is the Wall Street cheat sheet. Bitcoin makes a new all-time high. another new all-time high even, and new people finally get interested and come in the space. And they go, well, I have some Bitcoin, I like Ethereum, but I'm not going to get like huge gains with Bitcoin and Ethereum. I need to get these like lower cap coins, maybe like meme coins. That's where I'm going to do the best because things are just popping. Meanwhile, people like you and me, our audience, we have Bitcoin, we have Ethereum, our portfolios are great. And we go, well, I'm going to take some of those profits and put it in lower cap coins. Those cause those lower market cap coins, us plus retail, pumping them up. And it's just where, people want to gamble, gambling websites, prediction markets, they're blowing up huge. And that kind of like human behavior isn't going to stop. So meme coins will be back again. It's not going to be the same. It's most of those meme coins you saw back then do well, will not do well again, but the humans want to speculate, and meme coins are a natural product market fit for that.
I do wonder what happens when machines take over the investment industry. Well, machines want to speculate. We'll save that conversation for another time. Tell us where we can find you and your brother's work for now, and what you guys are working on these days.
David Lin, thank you so much. Anybody from our audience who's watching this interview, sub to David Lin. He puts out great work. People can find us at Altcoin Daily on Twitter. X, just about to hit 2 million, probably by the time this comes out.
Congratulations.
2 million. Thank you. In a time when everybody on crypto Twitter is complaining that they don't get any reach. But you can't be bogged down by that stuff. You got to keep pushing forward. It's not as good as it once was, but we're still moving forward here.
You guys were at 1.3 million just I think 2 years, not even 2 years ago. Like what was like just I'm curious from a YouTubing standpoint, what was your growth strategy? Because I mean, even from you were big when I met you, but 1.3 to 2 million in the span of less than 2 years is still incredible growth.
Yeah, we're just about to hit 2 million on Twitter, and we're about 1.7 on YouTube. And it's just, you do it right. It kind of seems obvious now, but it wasn't so obvious at the beginning. Make content every day, good content. I mean, perfectionism is the enemy of a successful YouTuber. If you're trying to put out a piece of art or the perfect piece of content, that's cool, but that's not going to help you grow. Put out valuable content on a regular basis. It's, as much work as you want to put in, that's how much you're going to get out. I don't expect everybody to be as crazy as us putting out one video every day. But if you did it and it was pretty good and valuable and people liked it, I think you would get farther. Each new piece of content, it's like another little fishing pole out in the world to get people to find out about your channel. And, overall, it's just do good work. Good work rises to the top. And a lot of people stop making content when the market goes into lulls. And in my opinion, that's a bad move because by the time the market's back again, you're going to miss half the pump. And that's really when a lot of the audience gets interested.
And you see, this is my main David Lin YouTube channel now. This is my main account. And I am subbed to you. And I have the bell notification on my main channel. So you guys do the same as well. Sub to Altcoin Daily. Links down below. X, YouTube, the whole works. Thanks so much, Aaron. Thanks for coming on the show. Appreciate it.
Thanks, David. You're the best.
Thank you for watching. Don't forget to like, subscribe.